a flurry of monetary news this morning. We've got some analysis in Washington, D.C. with with David Wessel. And the news this morning that we have is that China has trimmed a key interest rate. It's the second time it's done so this month. The European Central Bank also cut a key lending rate, and then we have the Bank of England is expanding its bond buying program. With more on what that means, we turn to David Wessel in Washington, D.C. David, with the news out of China, is this an indication that Chinese leaders are more fearful about a global slowdown than we had previously thought?
Well, I think they're also worried about a slowdown within China.
Right.
There have been quite an abrupt slowing of the Chinese economy, and the Chinese leadership know that part of the secret of their political success is to keep things going in the Chinese economy. So, but I think if you look at take this as a whole, once again, the world central banks are riding to the rescue of the global economy. The Chinese cut their interest rates. It's the second time in 2 months, and they're trying to get credit back flowing in the economy. The Bank of England says that the economy in the UK is doing worse than it anticipated, and so they're being more aggressive. And then we have first the quarter-point interest rate cut of the European Central Bank, and right now Mario Draghi, the president of the central bank, will be giving his press conference, and people will be scrutinizing that to see whether this is the first of something else that they may be planning to help the European economy, which is already in recession.
And why the news today? Why this kind of flurry of monetary news today, Thursday, rather than spreading out over the course of this week?
Well, the Bank of England and the European Central Bank, like the Federal Reserve, meet on predetermined dates. So both the Bank of England and the European Central Bank had meetings today, so it's no surprise. Central banks like to act at these meetings because it gives the committee a chance to have a discussion in a more orderly fashion. The Chinese are completely different. They do it whenever they feel like it, and there doesn't seem to be any rhyme or reason. It's hard to believe, though, that the People's Bank of China wasn't aware that the Bank of England and the European Central Bank were meeting today, and they probably thought they'd get more oomph if they did on a day like that. Of course, the next big question is whether the Federal Reserve here in the United States will follow suit. They have a meeting at the end of July, and there's been a lot of speculation that they too will turn up the credit easing more than they have already. They took a big move at their last meeting, but maybe they'll take another one at the end of the month. I think it's too early to say.
And what is this news today before the Fed acts? What does it mean for U.S. consumers?
Well, it doesn't mean anything directly for U.S. consumers. After all, interest rates in the United States are largely determined by interest rates in the United States, and they're already very low. Mortgage rates, it was reported today, are once again at a new historic low. It does mean that probably, depending on what happens at the ECB press conference, that world stock markets, including our own, will rise a little. That was the early response. And that's good if you, A, own stocks, B, if you have a pension, or C, if your company executives where you work feel a little better about the world because their stock prices is going up. I think the big impact on the U.S. consumer is that to the extent that the rest of the world is just a little bit stronger, that increases the chances that we'll export just a little bit more, and it makes the chances that the U.S. economic recovery keeps going just a little bit greater than they were 24 hours ago.
And is the news out of China, as you said, in Europe, the meetings were planned for today, but is the news out of China, is that very surprising, and can we expect further moves in coming months from the Chinese bank?
Well, I have no idea what the Chinese government is going to do next. I mean, one of the things that's so interesting and different about the People's Bank of China, the Chinese central bank, is they're the opposite of transparent, and they're the opposite of independent. The decisions on moving interest rates in China are largely made by the political leadership, in contrast with the UK, Europe, and the US. It was a surprise. Analysts weren't expecting it, but it's not hard to be surprised when you're dealing with a central bank that doesn't tell you what it's thinking about. I think that people have been aware that the Chinese government is concerned about the slowing of its own economy and concerned about the slowing of its exports to Europe. And in reaction, they've gone from a tightening mode, worried about credit bubbles, to a kind of easing mode. And we saw they did this during the 2008 financial crisis. They have a lot of capacity. They have a lot of wiggle room in their fiscal and monetary policy.